Hello, everyone. Welcome back to the RationalInvestors.com's Broiler Chicken Show. Back. Actually, I don't even have that page open. I'm just I'm in Chris's hands when it comes to most of these videos. And it's kind of like, I'm not quite sure. I even just said fire when ready, and he's like, "All right, let's do this thing." And now I'm sitting here scrambling. What a doofus. Anyway, all I really wanted to do was just see, because I know you guys over on YouTube do ask a few questions. Just FYI off the top, the purpose of these calls is actually this Sunday call is to, I guess video. I'm not quite sure what we call it. Is to help sort of answer questions that the current education program students might have that we don't have a direct answer from one of the instructors, and I can sit here and chit chat away on those questions. The level 1 program right now is actually in session, and I think they're doing the strategic planning module, which of course is very thick, very in depth. It probably could be a whole course unto itself, really. But nonetheless, they are in session right now. So I think I'll probably spend maybe the first hour or so. If I don't know, do we want to do chapters, Chris? Do you know how to do chapters on these videos? You know, they break them into sections and stuff.
Yep,
I think you can actually.
those occur after we're done. I'll make notes during the show and then I'll add them in afterwards.
I think you can. There is a way to actually sort of like mark the video, but I just can't remember how to do that off the top. Yeah. So just the point being that maybe you could mark it like first half of the video is Brian ranting, and second half of the video, and we kind of did that last week, is we got into some of the Q&A from either current level 1 students that are just curious about the current material, or current level 2, level 3s, or even an alumni for that matter. And then of course, if I can't get to all the questions, then we carry it on Monday and Tuesday and stuff. So anyway, welcome back to the show. I'll try my best to give you guys some value here. Pretty tumultuous times, that's for sure. Actually, one thing I do like is, I'm kind of getting mixed messages right now. I don't really like the idea of strapping on new positions right now. And I think we had a pretty good looking sort of trade window set up there, geez, I guess about 2 or 3 weeks ago. I don't think it would be a good idea to shill new ideas to you in videos like this, especially considering we have a big, central planner, central banker, I don't know what the hell you even call it. It's ironic that we've spent so much time over the past 5-10 years just talking about decentral. And yet this economy, everything is still so highly centralized. And of course, everybody's waiting on the FOMC interest rate announcement here at the end of the month, beginning of February. And it's weird how, you can even see just on this breadth indicator, we had a big push out of December, or I guess mid-December. We often call this sort of like the Santa Claus rally. In crypto, it was a hell of a push. Then we got overbought very, very quickly, which is often what happens, because literally price just goes straight up, and momentum oscillators and stuff like that quickly get overbought. And then we've been just sort of, kind of floundering, drifting. Yes, price itself has made new highs, but I don't like the look of this breadth. This breadth looks very concerning. And now you can even see on our teal slow indicator actually has a very well-defined M, and it is sloping down hard now here. So even any kind of, if we did get some sort of crazy ass violent cross to the upside, it would be considered a weak buy signal at best, kind of like how, this was a weak signal. But when the teal was actually trending up and we got this crossover back, this actually was a huge rally in things like Bitcoin. Also too, I would say that a lot of the shalt coins, maybe we'll call them, I was even joking before we got the video going that it just feels as though, once you get to the point where basically everybody calls them SHIT coins, and of course it's all a scam, and you should be a Bitcoin maxi, and you should never look at those altcoins, they're all garbage. Guess what happens? Big old honking rally in altcoin land, and everybody falls in love with them all again. And I think I see exactly the same thing happening. It's sort of like, if you don't learn from history, you're doomed to repeat it. And the tragedy of crypto is it is venture capital, which means that you can get wiped out really easily. I mean, that's the hallmark of venture capital. You come in at the end of the market when everybody's like, oh, this time it's different. This time, then boom, the whole damn place blows up. And you got fraud stories coming out right, left, and center. And actually, I thought it was interesting. I think it was Josh who put out on tweets recently. Back at the top of the market, I was warning everybody that, hey, the frauds that will be the ultimate undoing of crypto are actually happening as the market is surging to new highs. And of course, that was exactly when, SBF doofus was all the rage, new billionaires handing out millions of dollars to politicians to buy their influence and the whole damn thing. It turns out it was all a big fraud. So if it's one thing that you can learn and write down through these videos, please. I mean, everybody should have their journals out. I'm not going to sit here and sort of brag about, oh, look at how much money I made here. Look how much money I made there. Ironically enough, what these videos are supposed to be is me trying to impart on you 30 years of market experience. And is there stuff that you can learn from this? And I would just simply say in your journals, I've told you many, many times, but if you're watching this for the first time, as soon as you hear somebody say this time it's different, then it's basically exactly the same as always before. So anyway, it is what it is. So the problem is with the market that looks like this, there's no way I'm going to come out and get tout all bullish. Bullish, 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 bullish. No, I just can't do it. It's too painful. I mean, if we look at the actual price action itself of Bitcoin, it is pushing higher. I thought this has been sort of like the chart du jour that I've been using on the daily briefs and stuff to sort of talk people through what I kind of see what's happening in the market. And I noticed, just the past two FOMC events, shortly thereafter, the market has puked out. I mean, the irony of it all is if you're a little old lady and you're just coming in here and you're buying, little nibbles, not really a hell of a lot of money, it's not that big of a deal. Whether you bought here or bought here, on balance, I like the idea. Probably just show you a new chart. Where are we here? New layout. I don't think it's a good idea to buy outside of appropriate buying zones. Having said that, if you're just dollar cost averaging, it's not really that big of a deal. But, even if we look at the price range now, we're starting to get away from the area where I think that there's like quote unquote value in the marketplace. I suppose off of this entire range, we are still technically in reload zones. I suppose with regard to like sort of venture cap, what I have been sort of touting to people of late is maybe we should like use something like 78.6 to 88.6 as our reload zone for venture capital. I'd say on balance, though, I'm pretty comfortable with using, and really the purpose of this image is just to simply try and show you where institutional players are going to actually start getting interested. 61.8, 78.6, line in the sand, all that kind of talk. Blah, 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 blah. What I'm worried about here, though, in this particular year is, I think we got to do something like a 2015, where we're going to go back and forth. There should be, it doesn't necessarily mean it has to happen, but there should be a nice trading range established that forms our base for the next move higher. And really, we've been doing this game a while now. What I've seen is usually about 6 months prior to halvening events. If I'm not mistaken, I think the halvening event, I can't remember. Somebody remind me when the halvening event was in 2015, 2016. Yeah, I want to say it was somewhere right around here. I don't know, that could be off. But anyway, the point here is about 6 months ahead of that halvening event. That's probably when you should really start getting interested. Where is, this is probably what I want. I always flounder over these things. Which one is it? Yeah, let's try that one. I think that's it, but I could be mistaken. Nope, doesn't look like that's it. Yeah, fudge. I thought I had it in crypto here. I may seem to make this mistake every single time. Where is seasonality? Coast to coast. I don't think it's in here. Oh, over here. This is probably right. Halvening cycle comparisons. That sounds like about right. Let's see what we got here. Yeah, I like this one. So I do think that we're going to look something like this. We're just bumping along here. You can see we're doing our thing. We never really did get the big wipeout in early January, which does concern me a little bit. I wouldn't be surprised if there's a dip near the end of the year. Also, too, from what I understand, feeling like the whole market, if you look at like January barometers and stuff like that, it feels like the whole market is setting up some sort of big Wyckoff event here through 2023. So where is Mr. Wyckoff? Wyckoff, there we are. So I do kind of like, and again, that's sort of like that. We're going to spend 2015 carving out some sort of trading range. And, there is an old expression in the market that says you don't really want to see the market rally into Fed events. This would be sort of January barometer here for the stock market. This is the Fed event right here, sort of January 31st, February 1st. You really don't want to see the market crank up into here because that's not a good sign for the other side of this. And actually something that I saw, which kind of concerns me a bit, I haven't seen this kind of talk in quite a while. I was sitting last night just while doing the YouTube short things. It's interesting how Twitter doesn't even like this, right? If you click on this, there's nothing here. I don't know whether there's some sort of copyright or whatever. You have to click on this link to see it. This scared me. So this guy, and anybody who watches watched the movie The Big Short, this is kind of the same thing where there was a scene in the movie where Steve Carell, I think that's the guy's name. He went out and visited some subdivision where there was a whole bunch of bag holders, I guess, and they're all sitting there with for sale signs on their lots. And he's like, "Oh boy, this is a bubble." I don't know whether you remember that scene, but this reminded me of that, where this guy was just walking through a subdivision and there's just house after house after house after house that have been built. But who the hell's living in them? There's nobody living in this, he was saying. And in this little short video, he was saying that these houses were going for like 400 or 500 G's, and they've marked the price down to 300 and some odd thousand now. And still there's nobody living in any of these houses, which is really scary. So I don't know how the hell this all plays out, but you've heard Michael Berry, I think. He has basically said that the 2008 financial crisis is looming, just like in fact, I think he said it's even worse than the 2008 situation, because again, these houses are sold, but there's nobody living in the houses, which is freaky. At least last time there was people living in there. But the question is, who owns these houses then? If nobody's living in them and they're all sold, I think he said something like 2/3 of the properties have already been sold. Who owns them? And then, what I'm worried about now is it's almost like there's an investor class that owns all these houses now. It's not people actually living in them, but it's like investors and these hedge funds, right, that are all smarter than everybody else. They've gone and loaded up on all these real estate deals, expecting, further and further appreciation. And there's nobody living in these houses, which is quite shocking. So this 2020s, this is going to be one hell of a tough decade if we look back in history. It's kind of a shame. But anyway, so the writing's on the walls. Also, too, another sort of good piece, and I should probably just tweet it out. This, I got to say, the one thing I absolutely love about TRI is we have such a killer community of not only good traders. I mean, I think Ulian was at it again. I mean, this guy's just absolutely insane. And, every year it's always like that around TRI. We got like one or two rock stars that are just absolutely killing it. Alim, yeah. And I feel badly for Stuart because Stuart with a T. Stuart with a T touted this idea. Oh, geez, I guess it was about, I don't know, maybe a month or two ago. Let's see if I can find it for you. That poor guy. Because the same thing happened on Bitcoin with him 2 cycles ago. He was able to get in on the Luna story right at the bottom last cycle. But this was a story that Stuart, and for whatever it's worth, every Tuesday, Stuart as sort of he is TRI CTO, Chief Technology Officer, and damn cool guy. But he also, I think, is very, very wise in the whole crypto space and the whole DeFi space. I mean, if I was going to ever lean on somebody to sort of guide me as to what would be a good or bad idea, and in fact, it was interesting. The lady who actually introduced Sjord to me and who actually ultimately got Sjord to come in, take our education programs, and ultimately he and I became business partners. I was talking with her the other day, and I thanked her again for bringing Sjord into my life. Anyway, this was Sjord's idea right about here. Poor old Sjord. And he said he tried to buy it, and his transaction got caught in limbo, and I don't know, some other crazy stuff. And look at what the damn thing's done. Holy jeez. And the funny thing is This is exactly how this stuff always goes, right? Right at the bottom. And, it's such a beautiful cliche about crypto because it's just so damn true. You couldn't, if I had come to you a month or two ago and said, this RNDR, call it a shalt coin, call it whatever the hell you want. I mean, look at it. It's right down at the bottom end of its range. This thing is going to double and it's going to give you the opportunity to get a free asset on the books for the rest of your life. I don't know what the hell this thing does. It goes to $100. Whoa, hey, let's go buy a Lambo with the money. It goes to zero. Who cares? It's free. And you would have said, you're crazy, Brian. You don't know what the hell you're talking about. You're a stupid idiot. As you always all do. I'm just kidding. Anyway, point of the matter here is poor old Stuart, he kind of got left behind. But, this is a good analogy of the current Dad Deep Soul Sound said he got some on the books, but he got out. Well, I mean, if anything, this is the one reason why I really like that little old lady portfolio approach is you just say, look, I'm going to buy some. I'm not going to get too stressed about if I miss the trade or not. But if it does run, I'm just going to sell halves on doubles, triples, whatever, and just don't overthink this stuff. Well, and actually, there's a really good example of another one, but you can clearly see, and anybody who's been working with me for a while has to clearly understand that I can't chase that. Even in here, I'm not allowed to buy this because if I did buy right here, what would I have to risk to? I'd have to risk to a break of these lows. So that means, if I come in here at 85, I got to very comfortably be able to see it fall in half and not be too stressed about it. It's a bit much. I can't really endorse that. And clearly, this is everything that we teach about big fat W's. When the W's come in, especially W's inside reload zones of previous bull runs, price coming up against key horizontal support and resistance. And then look at this cute little, down here is where you were supposed to buy. And you can see I even still have some bids working. And I wouldn't even be surprised, just like this rally, that once all this fluff is done and, maybe we're on the other side of the Fed announcement, we're going to come screaming right back down against the lows. So I can't endorse buying up here. I might go higher. As you can see, this thing still has quite a ways to go here, but I just can't buy that. So this is a good example of, names that I'd love to come and tout. I think it's a great story. And of course, come on the site and you can watch Stuart's presentation on the name and why he thought it was a viable product. Good fundamental analysis on his part. And then, you see where the buying levels are. And there's your end result. Well, congratulations to anybody who was able to get in on this stuff. A few other names. There was another name that was that's basically done the same thing. And it's another one that I really like. And again, it's our community. 1 + 1 = 3. We all work together to try and help each other out. If anything, I really dislike this sort of competitive nature that a lot of sort of, post-pubescent males get into. My dick's bigger than your dick, that kind of crap. What I want to do is, and this is what I've done over the past 8 years, is build a community where people actually want to work together to try and help each other out. So here's another example. This is another community member that told me about this story. I was able to get in on this thing, but it would be really irresponsible of me to come in and say, you know what, go and buy that one, you'll do fine. It's just not a good idea. So the sad thing is I can take this over to Bitcoin as well. I mean, Bitcoin's rocking and rolling right now. Don't get me wrong. And I actually hopped off my algo trade up here. So I'm just got to sit here and wait for the algo to get happy again. We actually have confirmed bearish divergence in MACD histogram. This is a daily chart. RSI is egregiously overbought. Willie is officially stupidly overbought. And we've rallied, basically what is that? Better part of $8,000 off the lows. And they're going after these highs, these liquidity pools that we've talked about in the past. I wouldn't be surprised if there's some sort of blow off top in through this Fed announcement. And we actually tagged that 4669. That wouldn't surprise me at all. On the other side of this event, with Willie being stupidly overbought like this, oh boy, this could be trouble. So, we'll cross that bridge when we come to it. But I can't endorse buying up there. It's just too risky. So that's the state of the market right now. You can also, this is going to be an interesting year, this 2023. Like, I do like the idea that we're going to carve out some sort of base here, which sets the stage. And, here's our halvening event that I made reference to. So it's July 2016. So this is that bottom through 2015. I think we're going to do something along the lines like this. I wouldn't notice that this low here is in like August and then, into September. I wouldn't be surprised if this August, September low actually takes out these this sort of end of the year, beginning 2023 low, because this was in 2015, this was a really good example of a capitulation sell-off. There was a gentleman, Mike Hearn. The Mike Hearn rage quit. It was such a beautiful analogy of the market just absolutely dumping, a lot of emotion. I remember one gentleman who took the education program through here. He literally was going to kill me through here because I didn't predict that this was going to happen. It is what it is. Later on, he made a bunch of money using the concepts that we teach. So I think he was relatively okay with me after that. But, especially new students, when you go through one of these kind of events, you just can't handle the emotional intensity. It's usually pretty damn intense. Now, we never went through that here, this particular cycle bottom, which scares me because that is usually a very typical event at one of these bottoms. I remember when we went through this bottom, I was coming back from Europe. And of course, everybody that got involved in crypto here, this final dump was sort of the final kick in the nuts. And all the people that got involved here, they all got wiped out through here. And I even remember the scuttlebutt through here was that Bitcoin had to go down even further. And everybody was convinced it was going to go down further. Maybe we got a little bit of that, with this, because on balance, even myself, I was still pointing lower. I'd also say too, I'm a little concerned about, like, if we actually look at this bottom from, like, say, a weekly perspective, it looks a little suspect. If we change that to a weekly bottom, is that really the makings of a long-term structural floor? I don't know. That's a tough one. I suppose if we're really lucky, we go boom, 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 boom. Like I said, probably that 4669 that I showed you on that chart right there. And then these highs, that's probably a major resistance level right now for the market. So back to boom, 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 boom. And then a nice dip into, usually around my birthday. And actually, you know what? I got to stop saying that. It's not my fault that this happens. It turns out that it's another guy's birthday that happens to fall on that day. And it turns out the whole damn reason why this market's so weak is because it's his birthday, not my birthday.
This is all myth. We haven't proven this yet. We haven't seen identification that alludes to that this is the truth or anything of those lines. Nope.
Guess who I'm referring to? I mean, I love working with Chris. It makes perfect sense why Chris and I get along so well. I mean, obviously, we're both basically cut from the same cloth. Anyway, I digress. I do like the idea that there's some sort of pivot in here. I mean, where exactly it comes in, do we really want to get into the prediction game? I don't think that's in anybody's interest because the market's just going to make you look like a monkey. So I like the idea that somewhere in here we calm down. Now, if we're lucky, and I mean, in this hyperinflation world, and we'll talk a little bit about that in a moment. Maybe this is the floor, right? Maybe with the massive money printing, 15,700 will be our new sort of base cost of production. That seems awfully high for me. I do kind of like the idea, and I don't know whether it happens into the spring. My hunch is this probably plays out quite a bit more. But I do like the idea that like into the fall here, we come down and we actually form our ultimate low down here in the fall. I don't, I'm just sort of just throwing numbers out there now. But anyway, in the short term, I would be thinking something like this. And what I've often found with crypto, I suppose you could argue it's the whole stock market, is usually in early February, there's a nasty little pullback. Now, this is actually a really cool tell that you want to keep an eye on. And actually, I got to hand it to David O. Over the past few years, he's really been working very diligently on sort of fractal bottoms and what could they potentially look like. Going forward, I think the most important point in the relative near term is I'd say there's two. Number one is where do we ultimately stall out here? I have a feeling they want to go after this liquidity pool right here at 25 and change. It's a big fat round number too. Psychologically, I think that'll be significant. So there is this one that where we pivot right here, I think is a huge tell. But I think going forward, what we really want to do is keep an eye on this low here, 17,592. If like this scenario, if we can come back and somehow hold these lows, then we are talking inverted head and shoulders. And if that's the case, then, and really heading into the summer, considering the way the January barometer looks, I think we can actually start realistically thinking about like $35,000 Bitcoin into the summer. I don't think that's unrealistic. Also, too, just, at any given point in time, we should always ask, what is a 38.2 retracement? Because this is what naturally the market wants to do at any given point in time. Really good example of this. Maybe, Chris, you could grab this as a Google short. Notice that this pullback, 38.2, in fact, we call this, a site member, Colin, who really likes using this level, the pump chaser zone. So market pulls back into this zone and then gets ready for another leg higher. Turns out, of course, that was the top. But at any given point in time, you should expect this pullback and test of 38.2. So you can even see it here, right? If we go off of that high, market's screaming down at any given point in time, you should expect that 38.2 bounce. It's what markets do. If anything, I'm almost a little worried. You notice that they paint a W into 38.2s. And as soon as that happens, bang, 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 empire top, down we go. So could you see this market, hold this level? And then we turn back up and then in through our rally through the spring and summer, sell in May and walk away, probably June, that kind of idea. Maybe Bitcoin puts in some sort of top and then we come back down. That's very realistic in my eyes. So for this kind of scenario, as I said before, you can't chase this. I don't think it's a good idea to chase that, especially with the Fed coming up here shortly. That's kind of asking for trouble. So we're going to have to wait for some sort of consolidation, some sort of pullback. And the question ultimately is, do we hold this low here? It would be on this kind of price pattern. This is where my algo is going to start turning back up, and it's probably going to want to get me long again on some sort of consolidation bullish resolution. Probably on the other side of the March holiday. That's usually how it goes. March, April 20th, market likes to rally into 420, all that kind of stuff. But then once that's done, then we get ready for Brian's birthday mass. Anyway, so in the near term, let's keep an eye, especially with this following the Fed announcement through the month of February. We should see a bit of a pullback in the broader stock market. Let's see what that consolidation looks like. So, if you're marking up your charts, and I even sort of put this out on Twitter, I built this one indicator specifically to keep me out of trouble. And this one indicator, it's a heavily modified Williams percentage R indicator. It's taught in our level 1 program. But generally speaking, when you see the market is overbought like this, it's not really a good sign to be a buyer up here. And then conversely, if you see the market oversold like this down at the bottom, it's generally not a good idea to be a seller. And in fact, if this yellow line gets above -20, I consider the market either stupidly overbought, or if it gets below -80, stupidly oversold. And sadly, this is exactly when my retail customer base would be calling up and asking, hey, Brian, what do you think? Is it a good time to buy Bitcoin? So I think actually I've heard quite a bit of people, especially on this site. I'm hearing a lot of people on this site starting to talk about, hey, I'm getting calls from my great uncle Bob that he's asking whether he should buy Bitcoins now. So those kind of anecdotal stories, they don't help the situation either. Also, too, and I thought this was interesting, is I think you can actually do an Elliott wave here. And I'm actually a bit surprised that we haven't heard more from Julian on this, because I think you can go, where is the base? I mean, is the base this? And is this a one, the way that the Elliott wave should work? Actually, let's take this here. Maybe not. See, the thing is, I don't know whether that's enough of a base, but kind of thinking Elliott wave, we go 1, then 2 to 3 is usually the biggest move, but this is over a weekly chart. This would be like maybe daily. Yeah, I think it's more something along these lines. So the question ultimately is this enough of a base? Like if I go 1 to 2 to 3, that makes sense to me, because 2 to 3 is supposed to be the biggest wave of an Elliott wave pattern. The only question is this enough of a bottom to actually start your count? And of course, the Elliott wave is incredibly subjective. So, but 2 to 3 was definitely the biggest, strongest move here. And then 4 to 5, you can see this doesn't have nearly the magnitude as this move. And also, too, you can see this move up top here, it's on almost no volume. So clearly, there's some sort of trap being laid here. And again, that makes sense, right? We're heading into an FOMC meeting. You've seen how the market's acted the past couple of times following FOMC meetings. You see the way that they're bidding up the stock market. I mean, I was quite surprised. Again, like I said there just a few minutes ago, you don't want to see the stock market super strong heading into a FOMC meeting, because that's a buy the rumor, sell the news. And if it's one thing I've seen, it's these damn tech stocks. This is the communication services ETF that I bought here recently as a proxy on this. I mean, this thing's just on fire. This is a weekly chart, right? We go back to the daily chart. Look at that. Look at me, I'm a bull. I mean, it's like, slow down. And of course, look at all these holes in the chart that it's leaving the whole way up. In fact, actually, level 2 program should be doing gap theory pretty soon. And I don't know, it almost looks to me like we can actually, I don't know. This one probably, you know what this actually looks like? I think actually it goes, well, Jesus, there's a bunch of gaps here, right? So it almost looks like that's a breakaway, that's a measuring, and that must have been exhausted of that move there. So if that's the case, then maybe this is our new breakaway. This is our new measuring. And if that's the case, then our ultimate objective should be up here somewhere. And we should, and if anything, the way that Bitcoin's acting right now, we probably should see one more gapping bar, which creates the exhausted gap up top here. And if you see an exhausted gap come in at the end of one of these measured moves, then that's sort of validation that, yep, we're getting ready to top out. Also, too, if we just look at this range, you can go reload zones. Notice all of our gapping action, gap theory, just going to do nothing more than take us up. We filled in this very noticeable gap. That hole now is, I guess, basically being filled in now. Also notice there's a big old hole right there and right there. So, interesting how our little gap theory thesis would take us up into those levels. So I could see, if Bitcoin's strong here now, I could see them launch the market higher, gap it higher tomorrow morning. But this isn't a good sign, folks. You don't want to see the stock market rallying into the Fed. If anything, here's another anecdote. Do we want to take trades at trend lines like this? Is that a good place to go in and be a buyer of assets? I don't think so. Usually what ends up happening here with these kind of studies, especially considering we have so many tags of this trend line, well, you get your burst. And of course, like we said, into that Fed announcement, probably just put a line on here. Fed is right there. We get the gap that finishes communications. Bitcoin, of course, rallies up to that 25,000 liquidity pool, yada, yada, yada. Then the market actually comes back down and it starts walking back down this trend line from the other side. And notice if we did do that through like February, March, right, all we're doing is just filling in these gaps as we walk our way down the trend line from the other side. So that's kind of what I'm thinking is going to happen here. Of course, it's just an opinion and everybody's got one, just like other things. And my opinion is just as stinky as those other things sometimes. So anyway, I mean, it is what it is. The point here is I can't take a trade right there. It's just not possible. Actually, that's interesting. Somebody asked me, am I bearish? Well, I mean, the interesting thing is I went and bought stuff like this one down here. So how do you think I'm feeling right now? Am I so maybe that's a better question to try and how do I describe this? I think it's you're asking for trouble when you see charts that look like this and being bearish down here. I think you're just asking for trouble. I would even argue at this level, do you really want to be bearish here? Like, that's the whole point of this silly reload zone stuff I'm trying to teach you guys. If I want to be bearish, this is where I should be starting to think bearish. Up here, not down here. So it's not really like I'm bearish. It's just that if I went and bought this asset here, I have to risk all the way down to here. So it's sort of like it's too late to be a buyer, but it's probably too early to be a really aggressive seller. Does that answer your question? EKZOTIC1? If anything, what I would say, kind of like what I was saying there earlier, is what we really want to do is watch how, if you're interested in Bitcoin, how does price act on its next test of that level there? If this level holds and we can get some sort of structural bottom, like a big fat W down here, that would be nice, right? Like that. Then inverted head and shoulders, and I'm looking for 35 Gs. If, however, this level does not hold, then, and this is the comment that I was making about David earlier, is this potential inverted head and shoulders can actually turn into a pretty nasty bearish chart pattern, what's called a megaphone. So, and the interesting thing, of course, is that if we go through this high up here, then that will paint the beginnings of our megaphone top. And so the megaphone will actually start looking something like that. And you put your little megaphone icon right here. And what should happen is we should brush against that and then come down and brush against that and go like that. And, this chart pattern, if you're really good at what you're doing here, then that becomes a trade location. That becomes a trade location. And, if you see nice M's come in up top here, that can set up just absolutely insanely profitable trades. There used to be a guy on the site, Greg Pop, who used to this is the only setup that he liked because, look at the risk rewards. There's your risk and there's your potential reward. Remember, the whole key to this whole silly business of trading is you want to make sure that this box down here, we'll color this green, right? This box consistently is much, much bigger than the red box. And, even if you just think about it in simplest terms, if you can hunt these kind of setups, right? This is the way the professionals trade the market. Don't kid yourself. Just on balance, let's see how many trades I could be wrong just to fit inside of one winning trade. So you can see in this particular example, I don't know whether this would actually happen to you or not. Let's just, we'll just ballpark eyeball this kind of thinking. I could actually take 5 trades, 1, 2, 3, 4, 5. And I'm wrong 4 times out of 5. Is anybody gonna, subscribe to your YouTube channel? Is gonna, 100 million views and all that crap, the social media circle jerk nonsense. Is anybody going to subscribe to your newsletter if you are wrong 4 times and you're right only 1 time? I absolutely guarantee you they won't. And it's because I talk to you guys like this. This is half the reason why I don't have a bazillion, viewers and followers and stuff. Because I'm going to tell you right out of the gate, I expect to be wrong 30 to 40% of the time when it comes to my trade setups. And it sucks, horsecocks. Don't kid yourself. It's not a lot of fun, but I don't think a lot of people realize what actually like a real trader's life is really like. I think there's a lot of sort of posing and every cycle we have a whole new wave of quote unquote traders that come into the space, and markets move for a while and then market state changes and their trade setups don't work, and then all of a sudden they start getting really frustrated because they haven't built their plans with the anticipation that you're not always going to be right. So anyway, here nor there. So what I'm trying to say here is we really want to watch this. First and foremost, in the short term, we probably want to watch how we're going to act against this 25 and change here, especially through this Fed announcement. On the other side of the Fed, that's when I would expect to see a bit of softness come in the market. And it's at that point we want to really watch for how price acts against this, I guess, 17.5 to 18,000, somewhere in that neighborhood. If we can resolve bullishly and we start getting momentum divergences, we start getting bullish structure, triangles, W's, inverted head and shoulders, whatever, then I think we can actually set up for a pretty nice rally into the spring. If, however, we lose this low and we keep careening lower, then unfortunately I think we're into megaphone territory. And if that's the case, then get ready, folks. We're in for a wild ride. Regardless of however this tops out here, is it an idea to hunt short setups following the Fed announcement? It's not a terrible idea. I was really impressed with Julian recently, where he was like, and he trades the stock market and gold and all that kind of stuff. But in essence, you can see clearly we had one hell of a signal right down here. Just the most beautiful signal. Kaboom. But that's not today. That's a while ago. Just even if you took this signal right from here, and here we are now, this is a daily chart. That's 3 weeks ago. And quite literally, when I talked to Julian the other day, and I was like, dude, you're ready for prime time, you're kicking, and he's going, yeah, but I don't have any trade setups. There's a horrible location. There's nothing for me to do. And I was like, congratulations, you finally made it to a professional trader. You know that actually you, as a professional in the marketplace, you actually spend more time doing nothing and just waiting. There's a classic line in the stock market. I can't remember. I think his name is Peter Lynch, but I can't remember exactly who it's attributed to. And he says, the only time I trade is when I look over in the corner and I see a big old pile of money just sitting there, and I just have to walk over and pick it up. And, if we rallied up top here and there was a whole bunch of divergences that formed up here, and you got a big fat M, and you see this megaphone type pattern, and you took that short trade setup, that would be that kind of situation where, gee whiz, the market's rallied hugely and I'm getting short signals, and, just simple things like 50% retracements. You should expect, remember I told you even 38.2 retracements you should expect at any given point in time. This would be that kind of analogy where, hey, the money's just sitting there. I just walked over and picked it up. So I was exceedingly pleased to hear the way Julian's been speaking lately. I mean, he's just talking like a true professional. So I'm very proud of him on that regard. Problem, I'd love to come and show you the idea, hey, buy Bitcoin, you'll get rich. But frankly speaking, right there, I can't touch that. Sucks, but just is what it is. And then, as we go down the altcoin food chain, same sort of thing. I mean, beautiful trade. Thank you, Zugi, wherever the hell you are. I mean, God, next time Zugi says, hey, I think I got an idea that I'm interested in, I just okay, where's my broker's phone number? Just call him up. Okay, I want a couple grand of that. Just throw it on the books now, please. And there's a number of these things. I think I told you earlier, Sjord was touting a couple of, and I'm not sure if this is DeFi or how this works, but poor old Stuart. And I just said, if anything, just be happy that you're at least thinking in the right direction of the market. Stuart is exceptionally good at identifying fundamental stories in the crypto space. And so really, Stuart, you just keep being the all-star that you are. So proud of him on that regard. As you can see, we got a bunch of names that we are following here. This is sort of our latest iteration of the crypto move. There's even little cute ones. Like I picked this little guy up here. Nice little weekly double bottom breakout. Seems to be operating pretty nicely. Hell, earlier today, this thing got all the way up to 52. Son of a gun. So I can't complain about that. And it's sort of the same sort of thing. If we get that Fed announcement, market takes a bit of a pause, even now, if you wanted to join me, I would just simply say, draw your reload zones and just be patient. And the interesting thing is we could very easily see these markets come right back down against these lows in the next month or so. That would not surprise me. Like our show co-host Paul on the Wednesday crypto show. And big shout out to Paul. He's going to complete the TRI education program. So we're all on the sidelines, major cheerleaders. And he was a little bit behind, but he showed me his quiz results. And he got 100% on the horizontal support and resistance, and he got like 85 or 88% on the moving averages module. So good to see Paul is kicking butt. But anyway, point here is he even said on his Wednesday show, with the way the dominance is acting and stuff like that, I kind of want to leave altcoins alone right now. That's his prerogative. If anything, our job at TRI is just to simply show you all the ways to play this game. You have to decide personally what fits your personality. And I think Paul's done a great job figuring out what type of trader he is and building his plan around that. Anyway, point of the matter here is I could very easily see names like this following that Fed announcement come right back down into reload zones. And it would be at that point that I would be interested. And you could even say I bought half of this position. If we do get that pullback and we get a nice W in here, then hey, I'm gonna go add to that position. Totally comfortable with that. And there's a bunch of names. I mean, there's some names that I really, really like, but I'm not allowed to chase, right? So I was told about this one. You can see where the W's are. I mean, there's a W as plain as day. All you slick traders, especially off that railroad tracks bottom right there. Oh my goodness, what a level. I was told about this up here. So as you can see, not allowed to chase. So I've got the green dot on here. I'm watching, waiting for that pullback. And interestingly enough, if we draw reload zones off of this, my hunch is we're probably going to tag that 2.618 first. But notice reload zones following that, 88.6, 78.6 happens to be right off the original W. If you want to participate in this thing, just be patient and wait for your reload zones. And there's a whole bunch of names like this. Look at this one. Jesus, this phantom just took off. Great application of Foggenbaum. So I think, this guy's probably done what he wants to do here. Maybe we oscillate around this 4669, but what a beautiful analogy of that. But same logic. And the interesting thing with this is if you just do a good old reload zone, notice 61.8, 78.6 is basically right back against that original bottom. And we actually have an interesting little sort of, I don't know how you describe it. I just moved that there. I don't know which is the most accurate level here to work with. We'll just go with that. So maybe there's a little bit more on this guy to the upside. But what I often find happens with these is if we hit this Foggenbaum up here, we actually often will come back down against this previous Foggenbaum, play with that. And then if this thing really does puke out, we'll come right back down to the original bottom breakout level. And this is what they call, this would be and we like to call it the Benkoff check. But, the guy who actually came up with it 100 years ago, Richard Wyckoff, that kind of thinking. It actually happens all the time. So point here is, again, don't want to sound like a broken record. You can see where the reload zone is here. Am I allowed to chase that and buy that? No, can't touch it. But, if we get back down into reload zones, Wyckoff checks, oh boy, Brian's going to be all over this thing. And you can even just, if you're not into the fibs, if you're not into the foggy buggies, just draw a trend line, right? There's your trend line. Boom. What a coincidence. Look how nice and conveniently that works in there. So anyway. So can I buy? No, not allowed to buy. Has it been a good rally? Damn straight. There's been some, there's this one guy, I keep telling you in these videos, this gentleman, Ulian, who's the Romanian. Any Romanians on the call? Let's see if anybody chimes in. If you're Romanian, go, oi, oi, oi. Come on, Eddie. Yeah. We're sitting here in the chat box going, where's Eddie? Where's Eddie? Come on, Eddie. Anyway, I got to tell you, man, these Romanians, it's fun working with them. This Ulian guy. Hey, there you go. Galaxy Seb goes, oi, oi, oi. There we go. There's Ulian. Is that our Ulian? Jesus Christ, this Ulian guy. You're going to be a hedge fund manager before we're done with you. Holy Jesus, I can't believe this guy. And you know, the great part about it is all you got to do is just, you know, years ago, we used to always paste this anytime we got like a string of banging out doubles and all that kind of stuff. And here's Julian going at it again. Look at this. Just incredible. Watching this guy in action is beautiful. And it's interesting how this is happening on KuCoin, because I think KuCoin is one of the last bastions of unadulterated capitalism left in the world. Like, I will tell you unequivocally, the United States of America is not a capitalist society. It's one of these funny sort of hybrid, highly manipulated, highly oligarchical. Yes, they say they're free market, but they're not really free market. Korea, as far as I can see, Korea is one of the last places in the world that's still sort of part of this Western society, you know, first world, all that kind of stuff. But still has that sort of that raw capitalist spirit. It's impressive to watch them. You know, in the 15 to 17 bull market, they actually used to be what we called the kimchi premium. And literally, people were so bullish of crypto and they were so into the market in Korea. The price of Bitcoin itself traded at like a 10-20% premium in Korea versus all the Western societies. And there used to be guys I used to know, especially on the site, that would literally buy their Bitcoin here in the West, hop on a plane, and then just go and sell it spot market on the ground in Korea and book like a 20-30% profit. I mean, the easiest money you ever made. Anyway, so maybe there's some karmic connection between Romania and Korea. I don't know. They both end with a, so maybe that's it. I don't know. Eddie, do you speak Korean? We should get a picture with Eddie with a big whack of kimchi on his head or something like that. Well, he only speaks Tanzanian. Anyway, so it's great to see that we're back in this environment where TRIers are banging out doubles like crazy. And it's, hey, you know, hats off to you, Julian. You're just kicking it. It's beautiful to watch you in action. Congratulations, sir. Okay, so kind of got off on a tangent there. Sorry about that. Actually, it's weird how these videos go like this, because I'll start the video and I'll go, I don't know what the hell I'm going to say. And then an hour and a half, 2 hours later, it's like, oh crap, I got to go to Liam now. So are we having some fun at TRI and crypto right now? You tell me, right? Yeah, but substitute drama teachers also stand with an A. And I can tell you unequivocally, Canada is not a capitalist society. Which is really sad. And it's not even really our doing. Canada, it's funny how we used to always joke and chide that the Russians and their oligarchs and the way the whole society is manipulated to serve the oligarchs in Russia. Hate to say it, I don't think Canada's any different. Canada, it's even worse because they con you into believing in you've heard of the American dream, right? And I guess to a certain degree, the American dream is still alive. But I'll tell you, especially the way the banksters have fucked over our currency here, and have made, like, just even the ownership of a house. If you were a high school student and you got out of high school today and you wanted to go buy a home and start a family, it's impossible. I mean, hell, even if you wanted it, like, she's a single family home in the city of Vancouver. There's only, there's 3 or 4 major cities in this country. So it's not like, we have an endless list of places to live. If you want to live in an igloo part of the year, all right, maybe you can find a cheap place to live. Because keep in mind, this country is damn cold. And it's so ironic because if there was one country in the world that should be happy about global warming, it should be Canada. Canada should be ecstatic about global warming. So it's so ironic that all of the rich people around the world don't live in Canada. Keep in mind, Canada only has about 3% of the world's equity. And, people in the United States, yeah, you might find that a huge chunk of your country becomes desertified. Look at what's happening to Lake Mead, I think it is in Nevada or California or wherever it is. It's the water is disappearing. But ironically enough, something like 70-80% of the country of Canada is like basically inhospitable because it is so damn cold. So if anything, global warming is like, it's a godsend for a country like Canada. So it's so ironic that the substitute drama teachers of this world are so brainwashed by people like Klaus, who have all their equity in like Europe and the States and stuff like that. And of course, global warming is going to really dent them. But anyway, I don't know. I'm not sure why we got off on this tangent. Anyway, it's almost funny the way that these silly humans are just so played. Anyway, so congratulations to all those people trading on KuCoin, the last bastion of capitalism in this world, it seems. Okay. What I really wanted to do here, I mean, first and foremost, we're supposed to be talking to the level oneers, but we were they are still in class. And of course, Grim's working them through a really thick module right now. So it doesn't surprise me that the class is a bit long. So I don't think that they're out yet. When they do come out, we'll jump into the Q&A. One thing, actually, somebody suggested that it might be a half decent idea today, because I have a bit of time. Like I said, I can't come in and tout buying a lot of this stuff here. It's too late. If anything, now you have to wait for reloads on pullbacks. So it's just the way it is. I've been working on this document recently where, I showed you this image earlier. I am 100% confident that nothing has changed in this anecdote at all. If anything, I am most interested in juxtaposing Larry Williams' 4-year inflation study. So anybody, any TRIers, you know what I'm talking about. I just got to blow my schnoz. Give me a moment here. I'm very interested in juxtaposing Larry Williams' 4-year inflation study with the Bitcoin chart. I don't have that data set. I'm not sure if it's something that he just creates on his own or if it's something that we can find on charting sites, but this would be a request to all TRIers who are watching the video. How can we get Larry's data set? What is it? What indicator is it that he's using for that 4-year inflation gauge? Maybe I'll just reach out to him and say, hey, I have an idea. I've been following this Bitcoin thing, and it moves in very predictable 4-year cycles. I noticed that your inflation study also moves in very, very predictable cycles. Somebody can find that image. I mean, when I get back from Liam tonight, we can review that. I'll find it on the site, but if somebody can find that while I'm talking here, that would be kind of cool. Sanjay, if you're watching, that kind of thing. Also, too, I believe that Colonel Mustard did in the drawing room with a candlestick, but that's a dad joke. Sorry about that. It sneaks out every once in a while. But I believe, which one is it? Fix money dilution. Where are you? I know you're in here. Out there. Should be. But I thought it would have been in there. Why do I not see this? Oh, you know what? I think I have it in fixed income. There it is. All right. So along the lines of Larry's 4-year inflation gauge, this is my sort of cost of money gauge. And sort of like the pressures on the system. Just keep in mind the Fed, a lot of people in the public, they blame the Fed for their troubles, but what they don't understand is the Fed is nothing more than a cartel of market participants. So it'd be like, our oil price is high because demand's really high, or our oil price is high because OPEC is screwing around with price. Kind of the same sort of thing. You could actually think of the U.S. Federal Reserve Board as OPEC. They're basically one and the same. OPEC is for oil. Federal Reserve Board is for fiat currencies. It's really that simple. When the Fed says that, yes, we want to promote growth, whatever the agenda is, we won't get into that today. They make money cheaper when they want to try and restrict things, theoretically, because inflation's getting out of control. And what you've seen over the past few years is a great example of how these central planners can lose control of the markets very, very quickly if they start acting really almost amateurish, to be honest with you. This whole MMT and all that kind of bullshit, right? It's just a joke. Hey, there's another Romanian. Is that Paul? Is that our newest level 2 student? Congratulations on joining the program, sir. Anyway, this teal line is sort of the market's freaking out index. And if it gets above 1.0, the market's freaking out. Fed has to act. You can even see as the market was seeing inflation start to pick up, the Fed did absolutely nothing, and they were sitting on their asses. And guys like Druckenmiller, of course, were highly critical of the Fed for the way they completely fucked this all up. Or did they? And that's tinfoil hats and all that crap. Anyway. So this is what the visual representation of the banking cartel saying, oh boy, we're starting to lose control of the situation. We better get in front of the curve. This is what that curve ultimately actually looks like. It moves in very predictable 4-year cycles. And as I had said there a few minutes ago, Larry has a really, really good historical sort of path, a 4-year inflation pressure sort of cycle chart. And I have a feeling that it corresponds with this chart really nicely. He has been talking of late a lot about that inflation cycle coming to an end. And that's one of the reasons why he thinks the stock market's going to do relatively well. And, January barometers, if we just listen to the chalk marks, this is where we started the year. This is where we are now. This is the month of January. We're running out of the month. That's telling us that we're probably going to have a pretty good year in the stock market if we finish up here. I don't know what the heck this week before the Fed's going to look like. You can see that right out of the gate, there's a big thumping. And I kind of think that that's what's going to happen here in February. But base finished the year. This was the first week. Base finished the year strong. And that looks like that Wyckoff image I was showing you earlier. But the month of January, and really the month of January, this is all about sort of what are the fund managers, the people that really are driving the market. What are they thinking that the economy is going to do? through 2023. And right now, it looks to me like they're feeling pretty uppy. We'll see how that goes. I mean, only time will tell, but January barometer wise, that's a pretty bullish vote. So do they see that maybe this inflation problem has hit this zenith, has hit this apex? And, our study here says that probably about the middle of the summer, that's when you're actually going to start to hear that the Fed actually might even start talking about, okay, we've hit the maximum, and now maybe actually we might need to stimulate the economy. We might even need to lower interest rates. Just try and remember, though, through these cycle troughs, sometimes it can take a while for this thing to turn. And I actually think the cycle trough is going to look something like this, where, we have this sort of base ahead of the sine wave bottom. In this case, the base came in just slightly ahead of the sine wave bottom. The sine wave bottom, the market doesn't go just straight down, straight up, but it actually makes this sort of very wide, slow turn. And this is what I think, though, is in store for us. So interesting how the euro dollar market is trying to bottom here. We do know, of course, we've got a Fed announcement coming up. And I would just make the simple argument that if the Fed does go and raise interest rates, which they've said that they were going to do, then what that should do is it should break this spread below these key lows. And if that's the case, then, that means that this dark blue line moves lower and this spread narrows even more. And you can see the euro dollar market. If it actually turns back up through this high here, then we know the bottom is in on interest rate proxy prices. The top is in on actual rates itself. So if we put all of that together, and then we go back to the Bitcoin chart, that would align nicely with some sort of bottom here through this year. I think it's going to be choppy. It's never going to be a straight line. And there's one lady who we like to listen to at TRI. I think she's got a pretty good head on her shoulders. And she was warning us about the credit crisis, coming down the pike. And I think she's a pretty smart cookie. She was sort of warning that the auto industry was looking a little suspect there. And, I constantly get really weird messages from this Toyota dealership I bought the car for Liam from. They want to buy the car back. I don't know, it's bizarre. So I wanted to show you that. I don't know how far back that was. Anyway, it was a really good video, good listen. I don't think, well, maybe it was this far back. Where the heck is it? There she is. And actually, I might even just retweet this out. Actually, I even had that. Oh, I guess I got rid of it anyway. So I really liked listening to this commentary. I think she's a pretty smart cookie. So I get the impression, of course, the Fed always goes way too far. Always. They always overdo it. And that Druckenmiller guy, he's always like, well, this is how I make my fortune because the Fed's so stupid. And I just take positions in the face of their stupidity. Then eventually they turn around, they get their act together, and that's when I ring the register. I got to tell you, he's pretty damn good at it. I could only dream to be as good as he is. Anyway, point here is if our thesis about the cost of money is turning and we've gotten in front of this inflation problem, if you listen to our buddy Dee Marcello or whatever her name was, I always get her name wrong. That's why I didn't say the name because I always mispronounce it.
Danielle DiMartino Booth.
There you go. And he says it. Did you hear the way Chris said it? Like, you stupid fucking idiot. What is your problem?
I was not saying it like that. I was just trying to properly pronounce her name.
If anything, that's a good way because everybody on the team's like, we got to get Chris more involved. So I throw these little triggers, right? Get my wife's name right. Oh, is that Chris's wife? That'd be cool. Anyway.
I think she's married. It's okay. I'll find a
Oh, is
Spanish
that your
name.
wife, Prince? Yeah, okay, cool. Anyway, so she's talking about how there's actually going to be a potential for disinflation here in 2023, which is interesting. Especially with our conversation about this gentleman and him saying that, there's and it's interesting how Twitter, Alan doesn't seem to like this. I'm not quite sure why, but it's fascinating also here, right? And this also speaks to what the hell's the guy's name? Big Short guy. He's come out and he's basically said that, hey, we're right. We're not you. If you thought the 2008 housing crisis was bad, oh boy,
Is that
you ain't
Michael
seen
Burry?
nothing, huh?
Is that Michael Burry?
Yeah, Michael Burry guy, right? And you listen to this guy, and it's like, something does not smell right here. So the point being that could we see, number one, the inflation problem goes away, and we actually get a massive backpedaling by the Fed through this window, the end of 2023. And I still think that the Republicans in the United States government are going to try and sort of put the kibosh on this crazy over-the-top spending. But what's going to end up happening is, and think Richard Wyckoff, that Wyckoff image I showed you, I get the impression that they're going to take the market down to new lows here. It's going to be one of these, oh my God, the sky's falling, right? And guess who's going to start throwing bucket loads of money at the market again, right? I think that this happens into sort of September, October. Hello, hello. Yeah. All right. Well, isn't that interesting? Somebody decided, this guy's, he's talking a little too much smack here. Are we still recording? All right, there we go. Uh, that should be back up on the screen now. Good thing is I've got Eddie's handsome mug right here. I can always tell I'm connected with Eddie staring at me. I love that. He got such a peaches and cream expression on his face, right? Like, did you want to buy a used car from Eddie? I have this craving. I want to buy a used car from this guy. I don't know why. You're awesome, dude. Oh, yeah, some NFTs. He's got some NFTs he wants to sell us. That's great. All right. Where did I leave off? What was the last thing I said? But you were saying September, October, we may see. Oh, was that far back? All right. Anyway, as I said earlier, I don't really like this as a buy signal. I think this is a bit of a trap. I think we're going to walk our way down this trend line from the other side. But the point here I'm trying to make is that with price right here, you could actually have the Fed, right? The banksters crank the market down in an absolute panic, right? And you get like news headlines: the Dow loses 1,000 points in a day. Hell, I mean, this is the S&P 500. I suppose we could look at the Dow. Is the same logic. You know, you want a really cool set of food for thought. I'm not quite sure why we're here, but if we go DJI, was 1987, was it actually a stock market crash? Was it? A lot of people would tell you that in 1987 it was a horrible crash. Oh my God, it was the end of the world, blah, 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 blah. But if you actually go back and look at the price action, what you find there is 1987. What you find is actually this market did nothing more than just a very natural 50% retracement. There was no crash in 87. And so this is the way the banksters manipulate society is, you know, they very quietly, and of course, while the market's moving higher, everybody loves it, right? And barstool guys say, hey, you ever heard that barstool guy talking about speculating in the stock market anymore? Oh, that kind of disappeared, eh? But, you know, and that Chack Pack guy, oh my goodness, that's hilarious watching the way his whole sort of SPAC empires collapsed. Anyway, point here is that wasn't a crash. That was just really just business as usual. It's just the sad part about it is anybody who chased, you know, you hear Brian talk about don't chase, don't chase, don't chase. Anybody who chased, they got their head handed to them. So, you know, fast forward to today, and, you know, there's the price chart. Chappelle has said repeatedly, especially through all of this, that all they really wanted to do was just bring the market back to sort of the pre-COVID highs. You can see that in that dump last November, when actually we got just the most incredible buy signals right across the board in the market. Really, all that was just exactly what Chair Powell wanted, right? He just wanted to bring the market back down into those levels. So here we are back up top again. What's scary is we draw our trend lines off of the peak. So, you know, clearly the banksters need to have a massive reflation of the money supply system. Think Great Reset, all that kind of nonsense. Really, it's just nothing more than the banksters setting themselves up to continue their money lending business and living off of interest. You know, actually, this is an interesting point here, right? Because, you know, we're not supposed to buy trendline breaks. So it's interesting how this one actually has come in a little bit sooner. Do you have a W there to work with? I don't know. That's a tough one. Almost feels as though the W really is going to be a trade up through that level, that high there. I mean, is that a W? Maybe. That's a kind of a sloppy one, right? If we change that to a line chart, it's going to be a bit sloppy. Yeah, I guess it's triple bottom. It's not bad. But, you know, if they start having the stock market going booming higher here, is the Fed not going to come out and say, well, you know, that's inflationary, we got to keep raising rates? I think this is a trap that's being laid here, and this thing's going to roll back over. But that's just my opinion. It doesn't really mean anything. But just try and remember that this is what the banksters wanted from day one out of all of this whole crisis scenario. Yes, we went all the way down here, but what they really wanted was just the market to come back. So this is kind of like equilibrium. I mean, I suppose it shouldn't surprise us that that happened right there. So, you know, if anything, this almost looks to me like, I guess what I'm worried about here is if we get to the fall and they start injecting a lot of fear into the market about debt ceiling and all that kind of talk. Wherever the hell they got the market up top here, this pullback here is what's going to get the politicians to act. So, that's what I would be expecting to happen later on in the year. And then the politicians will acquiesce and say, oh, stock market's crashing, we got to save the economy, when really all they're doing is they're just bringing it back down to exactly where they want it to be. And I would actually argue what would be healthy is for us to actually, and keep in mind, these price gaps, they always get filled in. Very, very rarely, what is it? I think it's like 8.5% of the time, something like that, gaps don't get filled in. And you can see, so it makes sense why price bottomed right there, right? If we go big old gap line right there. Where the hell's gap line? There it is, right? And where did we ultimately bottom? Hey, look at that. So they brought it right into the gap. I don't even know whether that gap's actually been filled in yet or not, So I wouldn't be surprised if we actually have to go back down and test that. What's scary about this, and this would be awesome in my opinion, is basically the whole damn economy starts melting down. Michael Berry scenario, that housing video guy, the Markello Booth. Chris is gonna get angry at me for mispronouncing her name again.
Danielle DiMartino.
Danielle
DiMartino Booth.
DiMartino Booth. All right. Anyway, point here is I would actually like to see the market come down and fill in all these gaps. And at some point down the road, we are going to do that. So don't kid yourself. Also, too, this is a really interesting analogy. Is the market actually this bullish? And I would actually make the argument it isn't. That in reality, of course, since the dot-com blow up, we've actually been living in this false world. Yes, the prices in the newspaper are going higher, but the powers that be have been diluting the shit out of the currency, printing it. Do you remember what you saw happen with Luna there, right? Where the printing press went absolutely insane just trying to maintain their peg thing. Well, I would actually argue the exact same thing is happening with the United States dollar. So ironically enough, the difference between crypto and the fiat currency world is actually almost identical. Anyway, point of the matter here is I actually think that we are doing this inverted head and shoulders pattern. And you could make the argument, what I find fascinating about this whole pattern is it started, and this actually took me by surprise. This pattern started right there. What is that event? August of 2001. August of 2001. Did something happen in this world around August 2001? So what a great analogy that we are still living in the aftermath of 9/11. That's what this whole economy is still trapped in this post 9/11 world, which is kind of sad, really. So, it's fascinating when you listen to, even guys like Larry Williams and stuff like that, they don't take this into account. And I don't understand why. And they look at this and go, oh yeah, look at the stock market. It's so awesome. But it's actually a lie. It's a fabrication, which is so sad. Anyway, so for us to actually really be in a bull market, I think we actually have to see the market. And actually interesting, look at what they did here. Look at that. So right up against our 9/11 conspiracy high, thou shalt, this of course, sadly, is your dot-com boom up here. And it was all bullshit. This economy here was basically a lie. And we've been living in that post-dot-com bubble, blowjobs in the White House, and then, of course, manufactured wars, And that war itself, man, I think the final bill was like $2 or $3 trillion. And oh, by the way, it's so bad. The US government officials, Donald Rumsfeld, comes out right here and says, oh, we've mysteriously lost $1.2 trillion. We can't seem to figure out where the hell it went. And then all of a sudden this happens. And the very place where the audit records were being kept happened to get blown up. I mean, it's staggering. And when you look at this image, this is the George Bush Jr. whole bull market peak. This is the lost another loan to die tech. This is when Brian, because Brian was a retail stockbroker through here, I used to ask people, do you own your own home? Well, it's not a question of do I own my own home? It's how many homes do I own? And of course, that was a trap. Boosh, right? So, and sadly, to bail out all this, basically outright theft of a generation's wealth, which is exactly what I think happened here. They gone and just diluted the crap out of the currency, which just does nothing more than just destroy the collective standard of living of all citizens that are subject to this fiat currency world, which is basically everybody now. And fascinating how our big rally, through Mr. Trump and all that kind of stuff, all they could do is just bring it back to this original peaking point. If you listen to the talking heads, they go, no, wait, man, look at our economy. There's George Bush's peak. You're trying to tell me the economy is the same or it's weaker now than George Bush Jr.'s peak? What are you, on drugs, Brian? And the sad thing is that, yeah, actually, we could not get through George Bush's peak. And then, mysteriously, we happen to have Klaus and his whole, what can somebody help me? What did Cole call this sickness? I think he had a name for it. I can't remember. Problem is, if you say it on YouTube, then all of a sudden you mysteriously disappear. Yeah, Nick saying here, there are unknown unknowns. Yeah, it's called, there's somebody's got his fingers in the cookie jar, every single politician. Anyway, so this is a total aside. I really didn't anticipate talking to you guys about this today, but this is our reality. We still are living in the shadow of the dot-com boom. We are nowhere near the standard of living that we had through here. And I tell you guys all the time, I used to buy a 6-inch tuna on cheese, $2.75. And now you go to Subway, that same 6-inch tuna on cheese, easily, $10, easily. So it just goes to show, and this is a perfect analogy of that, that's the quality of life, right? And the worst part about it, of course, is the kids that are working behind the counter. Here, they were all gung-ho. Hey, we're capitalists. And I remember the franchise owner and stuff that I used to buy the Subway sandwich from. He was in there working with the trenches in the lunch hour, trying to bang out the sandwiches, happy customers. Now you go to Subway, you ask that, and they literally, they'll spit in the food. Especially here in Vancouver, the entire fabric of our society here has changed. That kids who actually work in these jobs, they make no money at all. They have, relatively speaking, you can't afford anything here because of the hyperinflation, and they just don't give up. They're going to spit in your food. You're lucky you even get the food at all. And if you complain at all about the bad service, well, then the whole woke bullshit all starts to come to life. So it's pretty sad what's happened to our society. Anyway, so point of the matter of all of this was that I wanted to articulate this in a document for people to consider. I don't know. How are we doing on the level oneers? Did they finish yet? Oh, Jesus. Did Julian just bang out another double? This guy's a machine. So let's see what the hell Julian's up to now. Anyway, wild. He's a wild child on KuCoin. Way to go, dude. You're an inspiration to us all. And the irony of it all is he's just doing what I teach all of you guys. Half of the problem with this game is just executing, just actually doing it. I can show you guys reload zones, but it's fascinating. Like Julian's in there buying when you couldn't give away Schultz coins, right? And everybody's a Bitcoin maxi and all that. Now all of a sudden everybody's going to become all raw bullish of alts again. Go figure. All right, back to my conversation here. So the way this document should go is I would like this to be sort of like almost like a I don't even know how to describe it. Just a document that we want to give away for free, but it just tells the truth and it sort of explains why all of this is happening. And the simple fact of the matter here is that if you can participate, and you can see where the bus is already starting to leave the station here, I think, you're going to have to exercise some professionalism, patience, discipline, reload zones, W's, all that kind of stuff. Don't chase. But over this next 35-month window, I think we're actually setting up for a hell of an opportunity for everybody if they want to make a material change in their lives. The window is here now. So first and foremost, first off, like, why bull now? And I think we can make the argument, especially the fact that substitute drama teachers actually feel like they're doing the right thing, which is scary. When you have government officials that, because keep in mind, when they act just blankly, boom. And of course, this is perfectly for the banksters scenario. This is how they do these great resets once every century or so, just to make sure that their business model continues. I don't think that the inflation problem is going away anytime soon, which really sucks. I mean, this is the great reset, right? I did put together a couple links here, Mr. Friedman, if you want to learn about how inflation is nothing more than just a tax on a society. And it's a nasty tax because you can't really point the finger at anybody in particular. And it's weird how the mindless drones just accept it. For instance, my son lives for his McDonald's. I would not shop at McDonald's unless you had a fucking gun to my head right now. It's idiotic. The food quality is garbage and the prices are just through the roof. So not only are you buying crap for your body, but the price that you have to pay for this crap is crap. But my son is absolutely in love with McDonald's. He's been programmed very well. Keep in mind, my son has actually, it's interesting. Before you send your kids to school here in Canada, they have you go through a few things. Are your kids ready for school? And one of the tests that a child is intellectually ready for the education program is you go through the sounds that the animals in the barnyard make. And for the very longest time in Liam's life, you could say, "Oh, Liam, what does a cat say?" And he'd say, "Meow." "And what does a horse say?" "Neigh." "What does a pig say?" "Oink, oink." But the test is you ask the child, "Liam, what animal says meow?" And if they can't do that backwards thinking, like do it opposite to, cat says meow, what animal says meow, they're not intellectually ready for school. And actually, it's interesting. About 3 or 4 years ago, Liam had that breakthrough. So now, and I use it because keep in mind, he has his good days and he has his bad days. And I think some days his brain works really well and he's really with it. Other days, other chemicals or levels are very, very high in his brain. You can see that he's just not with it. And you just don't stress him out, right? And he goes, hey, just FYI, at the care facility, he decided to rip the sink out of the wall the other day. So now his bathroom has no sink. But hey, at least he's the good part about him being in this facility is that the government gets to foot the bill. So anyway, so I don't know where I was going with that. Oh yeah, well, I go with him to McDonald's. And you drive up to the window and you go, you raise the price of McDonald's again? I mean, like literally every time you go there, the price just keeps going up. And the little bimbo fucking workers at the window, they don't know. And they go, oh yeah, inflation, right? And it's just like, do you even know what the fuck you're talking about? So if you really want to know what inflation really is, I've included these links, like Mr. Friedman. And frankly speaking, he's about one of the few people in our society. And this was last generation. I think he's passed on now. So now there's nobody who's really sort of carrying the torch on trying to keep these dickhead, idiot substitute drama teachers honest. In fact, we actually had a half decent finance minister in our country, and he actually took the fall for the government's they got themselves wrapped up in a scandal. It was called We Charity or something like that a few years ago. And they actually had the government pinned. They had them cornered. And then all of a sudden, mysteriously, oh, this sickness came up. And all of a sudden, mysteriously, this finance minister who actually has some experience being a finance minister, he all of a sudden fell on the grenade and resigned his post. And in his place, they put a woman who had no experience at all in the finance industry, none, as the finance minister of Canada. Like, you want a perfect analogy of how corrupt this is and how literally the banksters had an agenda and they had to engineer it so that the person who was technically in the position to hold these banksters to account, she didn't know what the hell she's doing. She had no experience at all. I mean, what a perfect scenario. And then, of course, if anybody says, boo, COVID, 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 COVID. Oh, shut the fuck up. COVID, and you know how the story's gone here in my country with regard to this sickness. I mean, it's just, it's awful how corrupt all this is. So anyway. All right. Are the kids out of class yet, though? See, I don't really want to get to those until they're done. Okay, they are done. Okay. And I was just getting warmed up. All right. So in this document as well, I've gone and found some testimony from Mr. Greenspan himself. And frankly speaking, I think Mr. Greenspan was one of the last sort of people working at the Fed that actually understood how money actually works. And unfortunately, in the early 1970s, we all know, of course, the politicians conveniently destroyed the classic sort of gold as a base for your currency to keep everybody honest. And Tricky Dick, of course, moved us off the gold standard in this fiat currency world that we live in. And of course, if anything, what we should probably do here as well is we should have a link. And interesting that I'll just sort of add stuff as I'm thinking about this. What happened in 1971, right? You've all seen In fact, there's even a guy on social media that even does sort of just, that's all his Twitter is just what happened in 1971. So the point of the matter here is that there were market participants that clearly understood what inflation really is. And there were people trying to hold the government to account. And sadly, slowly but surely, of course, the government's wanting to maintain their ability to spend as much money on whatever government programs they sort of deemed that were necessary. Keep in mind, George Bush Sr., and even now, they created like government funded CIA programs that are not even auditable. If you were in the Congress and you wanted to go, just how much are we spending on these CIA programs? You're not even allowed to ask the question now. That's how bad this is. I mean, this is the reason why I think Bitcoin came into existence, is people saw clearly there's only one end to this, and it's the destruction of this fiat currency system. Just the question ultimately is, when does this happen? I don't know. It's tough to say right now. Anyway, so also to that end, try and understand like why be bullish of this sort of anti-inflation thing, i.e. crypto. Included a couple videos done by a gentleman in particular who's actually spent his whole life. Yeah, thanks, Sanjay. Sanjay, if you could find that Larry Williams 4-year inflation study, I think that would actually help this argument as well here too. But anyway, a couple, and I consider them required watching by students. You really should be familiar with both of these if you really want to understand the modern day banking system. That's a big if. I mean, maybe you don't want to, and I wouldn't blame you. A lot of people, I've said this repeatedly, a lot of people that I try to teach how the actual money system works, what it's going to take to actually be a profitable trader, i.e. you have to do the exact opposite to what you hear on social media and stuff like that. And then, of course, you have to tune out the banksters, and you have to tune out the politicians, and you have to tune out the media. I mean, a lot of people go, Brian, this just isn't worth it. It's too much of a headache. And I don't blame you. I mean, here is a really, really good example of what is truth. And these are these fiat currencies. This is the US dollar and basically the US Federal Reserve System. We have the Eurozone and its money supply. We have the Japanese, which I think are basically the anchor of the Asian economy. And then, just for fun, we have substitute drama teachers and their stupidity. The problem here, folks, is that this, there's a law in physics, right? Matter cannot be created nor destroyed. So I've always scratched my head, especially when I was first getting into this business. I couldn't understand how the United States stock market could just keep going up decade after decade after decade. And the saddest part about it is that all the talking heads and politicians and banksters, everybody, all working in cahoots, would say, well, it's because the United States is so awesome and we're so pro-growth and this is the best place in the world to live. And this is a lie. This isn't real. And as I showed you earlier, if you actually want to look at it for real, this is what our society has done over the past 20 years. We're not in a bull market. We're actually just, if anything, we're still in a bear market. So I start off the conversation with, this is the problem right here. This absolute runaway money printing. And I suppose it was sustainable as long as we kept a relatively flat growth rate. But you can see here is 2020 in the United States, and you wonder why we have this quote unquote inflation. Well, look at what they did to the money printing. I mean, this just basically went parabolic. There is your inflation, folks, right? Staring you right in the face. And the interesting thing is Eurozone, there's no end to what they're doing. You hear what's going on in the UK. Still double-digit inflation. I think Europe's still double-digit. Japan, of course, has been on a never-ending money printing spree, but their society itself is on a massive deflationary spiral. And then, of course, wonder why Canadian housing and everything, grocery prices, the whole damn thing, why did that happen? Why are we going through this insane hyperinflation? It's right there, folks, staring you right in the face. And what's so sad is that when you try and hold the politicians to this, there's always some sort of bluster that they can do. And, I remember when I worked at Transport Canada, there was this one minister that came in, because keep in mind, every time a new government comes in, the new government appoints a new head of the transport ministry, right? Because it's just one of the government ministries. So every time a new government would come in, they'd pull us all in, and we'd have a big pep talk with the new minister and blah, 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 all that bullshit. I mean, I happen to be part of the executive committee. No idea how the fuck I got involved in that, but nonetheless, there I was. So I had to listen to him. And he even blatantly said in this meeting, and of course, this was closed doors, it was ministry, you're not supposed to talk about this stuff to the public. He even said that there was even a course on how to avoid, I remember because I used to run the video conferencing equipment for the executive committee. There was even a course that they were required to take on how to not answer questions that were asked of you. How do you avoid answering the difficult questions? I mean, Mr. Friedman right here, just go listen to him. He would just simply say, you want to see your inflation? There it is. It's just as plain as bloody day. So go figure. Okay, I think what we'll do is we'll leave the this opportunity is now here, the TRI's crypto bull cycle trading plan. Keep in mind, this is the next 35 months. It's not like this is going anywhere soon. And just FYI, and I've been through about, at least a dozen of these cycles. The last 6 months of these cycles, that's when the market goes parabolic. So the fact that we're right at the very beginning of this cycle, I still think, and I've said this repeatedly to you guys today, I still think that the beginning of this cycle looks flat. So yeah, price is being bid up now, but price goes up, price goes down. We'll just continually walk through this document over the next, say, 3 or 4 months. And hopefully after this has been done, maybe we can piece together these videos as like a full sort of video explanation along with the document, and just give it out there for free on the internet. So anyway. Okay, like Chris reminded me, I've got about 20 minutes or so. Actually, man, let's call it a half an hour. There were a couple questions asked on the Q&A document following the class today for the level oneers. Might even be a level twoer, who knows. So let's jump into those, and then I'll bid you all adieu. And I don't know, give me some feedback here in the comments and stuff. Did you enjoy all that rant? I know it was a pretty crazy ass rant, but I hope you guys got some value out of that. Okay, so okay, 27th. Here we are. Oh yeah, DB after party. Mind you, I thought well, anyway, it doesn't matter. James, hi Brian. On the chart below, I use Binance Matic USDT as an example. Same for Binance FET USDT Matic. has already reached his 50% GAN retracement. Generally speaking, stocks, crypto, a return to 50% from the last all-time high has the same odds of success as GAN retracement, 50%, 52-week, please. Is that a question? What is the question? Generally speaking, a return to 50% from the last all-time high has the same odds of success as GAN retracement, 50%, 52-week, please. I guess that's the question. So I would, short answer, I would say that the just trying to articulate this in my head first. Simply put, the 52-week range, 50% rule, WD GAN, I think is very consistent. I would say that and it should happen sort of within 50% of the time of that year, and it's everything to do with GAN's sort of love of cycles, and I think it's a lot of biblical reference and stuff like that. I mean, there's a lot of references to cycles in the Bible. It's also similar to sort of the square of 9, the octagon. They all sort of fit in together. Like if you ever look at the top of Saturn, just Google that this afternoon while I'm out with Liam. You look at the top of Saturn and you go, there's no way that it can look like that. Why does it look like that? So I think there's a lot of math that's involved in the universe. And specifically, Mr. Gann loved 120-degree angles and 90-degree angles. And I believe that, it's like the tree of life and all those kind of things, like old Indian math. I believe that there is a logic to price behavior that has to follow sort of universal sort of constants. All-time highs and all-time lows are tricky because the question you have to ask yourself is, did the asset make the all-time high going through some sort of cycle? And if you think about things like, Amazon's a good example where, was Amazon really bid up to the levels that it was through the dot-com boom because it was such a great asset? Or was it more a question of the stupidity of the market took prices to just absolutely ridiculously high levels, right? Because this was through a generational Jupiter-Saturn cross. Brian's 15 or 17-year fear greed cycles, 17 and a half. Thought I had that image on here. Anyway, I showed you that Dow image. I thought I had that on here a second. Anyway, where did I put that? Oh, well, doesn't matter. So like something like Amazon, I would simply say that if you took a 52-week range from the high to the ultimate low, you can see that's 452 bars. So that actually had to take a little bit more than a year to go from low to high. So in this case, it might not be exactly calendar year, but did it hit 50% levels within half of that time? So that would be what, 225? 225. So there's half of that time. Did we get we can even go the other way. Do we get to that 50% level in exactly 50% of the time? No. So in this particular case, you can see that, yes, we did do a 50% retracement of that entire range, but you can see this took actually longer than the correction to get back to the 50% level. So why? And I might argue that this move here, this was the very end of a very, very long cycle. So it was sort of like, was this going to naturally just, do a 50% bounce in the time that it took for this correction to happen? No. And, I might argue that you might see the same thing with Bitcoin, that it might not just bounce in 50% of this time. This might take, so if we look at here, there, this, and if we just do the same logic as that Amazon, so top, this was the end of a long cycle. In fact, I would actually argue that this cycle actually finished here, but we won't get into that today. So could this cycle take a little bit longer? I mean, hell, maybe even takes the exact same time to get back to 42,000, and as that Amazon chart showed, this was 452, 519. So actually an extra 60, 70 bars, which is just an extra 2 or 3 months. So could we throw on 70 bars? What did we say that was? So that'd be like 450 to get back to that 50% level, somewhere in that area. Yeah, I could see that. Also, too, remember that the next halving event, which is what I think would be smarter to use as a reference here, that's supposed to happen in like May, June of 24, right? So I do definitely think that, we do something like that, right? Our rule is we want to try and start accumulating about 6 months prior to that halving event. So is it 365? So it's like 180, something like that. That's probably what I would expect to see happen is we're down here and we're not even back to the 50% level. So, again, I really think you have to put the move into context. I don't think I would expect that this is going to do a 50% retracement in that year time period. What I could see happen, which of course is going to drive everybody crazy, is I could see that high, and you might, well, actually, I don't need that. You might find that this high down to this low, and we trade back to this, and that is, where is that? That's March. So there to there. It's about 100 days shy of a year. So maybe like 365, somewhere in there. And then you find that half of this, which is like 180 or so, right? Something like that, about half. You find that this actually trades to this 50% level by then. I could see that. Definitely could see that. And if anything, that would correspond nicely with this kind of thinking. So I think you have to put the range that you're measuring into context, because this was the end of a very, very long, big bull run. And of course, also the 4-year cycles, right? We could probably go back to the last one. And let's see how long this one took. So from top to bottom was almost exactly 1 year, 365. The end of a very long cycle. So, 50% of that would be, like we said, 180 days or so. So that is right in there, right? 170, 180, right? Somewhere in that area. But you can see it actually took a little bit longer, right? So 50% rule. Yeah, I mean, pretty damn close, I think. So I would feel confident that the 50% level of the entire range should be traded too. On balance, we should say that 52-week ranges, you should see 50% rolls in about half of the time that it took to do it. The question really, though, is, are you measuring of some sort of insane blow off top end of a long cycle? And I guess what I was kind of trying to get at was like Amazon, it took a long time. Keep it, yeah, is that just a daily chart? Actually, yeah. So, yeah, we had this pullback, which was a little bit longer than a year. It was about a year and a bit. But you can see it took a while to get back to that 50% roll. But really good example, doink, once it was hit, then we were done. So I could very easily see the exact same scenario for Bitcoin. That wouldn't surprise me one bit. So the difference here, though, is that we know that there's a big honking of the trade. So I wouldn't be surprised, kind of like this, we rally up and then, the halving event comes and then we start a new cycle, brand new. Everything about this fundamental story is over. And now we have a whole new, brand new cycle to work with. And considering the juxtaposition of the money cycle, the inflation cycle, I think that the money printers are going to continue. I don't see any change to this at all. If anything, all they're trying to do, which is so ironic right now, all they're trying to do right now is just bring the market back to trendline growth. So you can see, you're going to hear all these, and the Bank of Canada even said recently that, well, we've decided that we're not going to raise interest rates anymore, but we are still continuing the quantitative tightening. Well, are they really tightening? I thought maybe I could draw a line here, but it doesn't look like I can. I don't know how to do this. Can we just go paint? Oh, yeah, there we go. This whole quantitative tightening BS. I mean, all they're really gonna. Oh, isn't that weird? Huh? Why did that not work? Well, anyway, well, let's try this way. All they're really going to try and do is just bring this stuff back down to trendline growth. So have any of the politicians said that they are going to try and run balanced budgets? Have you heard substitute drama teachers say that, the purchasing power of our currency and the collective standard of living of our society is really the most important thing for us right now? not even remote. Interesting. At least Japan is trying to stay on trendline growth, but this is way too steep. This is ridiculous. I mean, literally, they're just destroying the society. So the issue now is, can we at least just somehow get back to trendline growth? And so I think that's what the Americans are trying to do right now with all their quantitative easing or quantitative tightening talk. Is they're going to try and do is just try and get this silly line back to sort of the historic sort of path. But this doesn't mean that we're going down. All this means is that they're going to try and accelerate the money supply growth at a slower rate. Not that they're going to actually correct the problem. So, and it's interesting. You can see that the Americans, and really I think they have to, because the whole damn system is built on the American Fakese, right? If the American Fakese collapses, then the whole damn money supply thing, the whole story ends. So, isn't that weird how I couldn't do that? Let's try that again. Right. So you can see how the Americans, I mean, this is quantitative tightening right now. What a joke. Okay. And substitute drama teachers, they don't even know what the fuck quantitative tightening is. The Bank of Canada has said that they are doing quantitative tightening. No, they're not. Don't believe that bullshit. And what's so sad is the leader of the Canadian opposition actually had the Bank of Canada governor cornered and actually trapped him. And I got to say, this leader of the opposition here in Canada, he's one smart cookie. He's very, very good at cornering these guys and trapping them. And I find it fascinating that literally as soon as he cornered him, he trapped him. Yes, the Bank of Canada is blatantly lying to the Canadian public. All of a sudden, mysteriously, the conversation ends abruptly. And actually, you might even, this is the euro, beg your pardon. Now, where the hell's Canada? There's Canada. Look how brutal Canada is. Oh my goodness. So that's your quantitative tightening? You got to be kidding me. Really what they are going to try and do, you can kind of see how I get ramped up here, and then quantitative tightening. All they did was they're going to try and slow the slope of this growth so it can come back to sort of trend line growth rate. So you can see, yes, the money supply is still going. Yes, inflation is still here in Canada. Yes, it's absolutely unaffordable for anybody. You go to the grocery store and it's almost comical. You go to McDonald's and it's like $12 for a McShit meal. I mean, it's ridiculous what they're doing. But substitute drama teachers are hell-bent on raising the money supply and building out as Klaus's communist dream. And this is the end result. We live in a shit society. Thank you very much, substitute drama teachers. Way to go. Anyway. All right. I don't know whether that answered the question, but your question was, again, how the hell did I get on inflation? What I would simply say, and this is a pretty easy one, should I expect a 50% retracement over this range? Absolutely. The only problem is it doesn't have to be a straight line. It doesn't have to happen in like, a certain set time. What I would say is that on balance, 52-week ranges are respected. You might even argue that low to that high, 50% looks like that was solid. That high to that low, 50% seems completely realistic here. The only thing I would say, though, is that because this was the end of a 4-year cycle top, you have to sort of take Mr. Gann's sort of 52-week range thinking and the market bouncing in exactly half of that time period with a little grain of salt. That's all I'm going to say. And I think the perfect example, as I said there a moment ago, is that Amazon chart. Because the Amazon chart was at the end of a very long bull cycle. And as you can see, it didn't pop in exactly half of this. It actually took almost the entire time of the correction to actually just even make it back to the 50% level. So you might find that you have this kind of scenario with a lot of these shalt coins. That wouldn't surprise me at all. At the same time, too, because venture cap is so damn volatile, what I usually suggest to people is at any given point in time, you should expect a move back to things like 38.2s. That's pretty business as usual. Is it going to happen in exactly half of the time that it took for this correction to happen? I don't know. I think because this is a massive cycle pivot, I might be a little bit leery in just making that blanket assumption. Which was the asset that you asked about in particular? Was it Uni? It was one of these, wasn't it? What time is it? Oh shit, it's already 1 o'clock. Okay, well, I'm gonna leave that question at that. Tell me if that answered your question. If not, we can attack it again tomorrow on the Broiler Chicken. Oh, there's a few questions. All right, moving on. Hi, Brian. I started buying Chainlink at too high of a price last year, around 20. Been dollar cost averaging over time, and now my average is 12. Chainlink is currently 7 and 20. For me to double my money based on the average of 12, Chainlink would have to go to 24, which I don't see happening anytime soon. Maybe next bull run. Okay. Chainlink doubles from where it is now, it would only go to 14.15. That would be a small profit, but not a double. I think Chainlink will perform well in the next bull run, but there are no guarantees. If it were you, and I know you wouldn't have bought at this high price in the first place, would you take a small profit and get your money back, or just hodl the position until you get a double at 24, whenever that might be down the road? Good question. Suppose it really all depend on how big of a portion of your portfolio this represents. If you're in deep and it's like, oh my God, this is just an absolute nightmare, I always think it's the best idea just to clean stuff up and just try and play from a position of strength. I actually don't have a problem if you just simply, kind of like what we just said there. There's a 50% rule. It's $29. If this does not represent too big of a risk for your portfolio, I don't see any reason why you can't use that as a price objective. Also, too, you can always contribute more to your trading plan, your stake, as time goes by. If you've got a 9 to 5, you can throw in $100, $200, a month, week, whatever, just to keep increasing the size of your stake. And then by definition, if this doesn't represent too big of a portion of your portfolio, over time, if you just keep adding more capital to your portfolio, then that percentage exposure of your overall portfolio will go down, which will leave you the ability to add to this trade. Don't really want to risk more than 5% of your stake on any one idea. So if you are up in that area and you're kind of underwater and you're just sitting there humming and hawing, I actually don't have a problem with just saying, you know what, I have my open order working at 50% rules. You might find, and it wouldn't surprise me, like this would be a good example where I could very easily see through the year of 2023, we kind of do something like this, and you're going to get a lot of back and forth. So what I might suggest at this point is, if you can add to your stake and that gives you a bit more purchasing power down the road, then you can always draw your reload zones. And as the market is working away here, you can come in and just add to the position on tests of bottom ends of ranges. That might help bring your average down. But believe it or not, I don't have a problem if you wanted to use that 29.45. This is probably a perfect example of like that Amazon kind of trade where, yes, we had this window here. Keep in mind, this was a big cycle pivot. So I'm not going to say it's going to happen like clockwork. 404 bars. So you can see that's over 1 year. And boobity-boo, boobity-boo. So 50%. Obviously, we've gone beyond that 50% number. And we're still just bumping along here. Could this thing take a year or two to work its way back up into this level? Sure. It's not unrealistic. And, we've talked about this lots in the past. If you watch the shows from back in 2017 and stuff, where we used to always say, there are guys who are sleeping on the couch right now and they're trapped in these candles right here. And as soon as price gets back up into these areas, they are going to be sellers. So my hunch is that there's pretty high probability we are going to trade back up into those areas. Any sort of sharp Wall Street guy kind of thing, he's going to look at this and he's going to say, all right, I see where there's a whole bunch of liquidity. And, it might also be stop loss orders, that kind of stuff. So, but, they're going to put a bottom in here. They're going to rally it up. And into these events, that's when they'll actually be taking profits. So I don't really have a problem with you still using $29 as a price objective. That's not unrealistic in my opinion. Unfortunately, like, when is the trade going to happen? You're trapped until we start getting W's on the other side of that trend line. So, where the hell that is, there we go, boom, boom. You can see we broke through the trend line. Now, what you want to see is, can I please have a big fat W over here? If you do, you might find that happens by the summer. It could very easily happen by the summer. So I wouldn't really have a problem with that. I mean, the big issue here is have you broken the risk management rules? Because if you have, then you got no choice. You can't add to this. If you can add to your stake, let's say you broke the risk management rules, but you can add to your stake to the point where this position does fall back underneath 5%, then you can always add, which is going to bring your average cost down even more. And using a target like 29 bucks down the road, in my opinion, there's nothing wrong with that at all. So I hope that helps answer the question. You're just going to have to be patient and disciplined. Okay. Yeah, so I think actually you can see 29. So yeah, I think you could get 24 there. And really, if anything, we want to be accumulating positions right now, not selling positions. So if anything, what maybe just leave this alone. Just say, okay, I went through my money in. Now I got to just let it work. And let's go find other names. Ask Zugi. I'm sure he's got an idea or two. Ask Ulian. I mean, did he just get another double off? This guy's killing me. Look, he just banged another one out as I'm talking here. I think I need to hire Ulian as a fund manager or something. Look at this. There he goes again. Oh, geez, you crazy ass motherfucker. Way to go, man. I tell you, this is the whole reason why I built this silly website, is I want to see you people learning this stuff and then going out there in the world and affecting change. So I tell you, we should, if anything, Eddie, I think we need to create like a Romanian group, and everybody in the Romanian group throw 5-10 G's into the pot. And just have you guys trade this up, and we need a Romanian TRI campus. And that fund just specifically goes and shops for a kick-ass place in Romania. Because I tell you, man, you Romanians, man, you are damn impressive. That's incredible. And it's so funny because, and I've said this before, growing up, I was always brainwashed with Ceausescu and that shit. And of course, the problem with the gypsies and stuff, I was always brainwashed to never trust a Romanian. But I'll tell you, almost every Romanian I've ever run into on my journey here, they have been the nicest, sweetest people. Remember this one guy when I went over to Austria, Dan, he was so cool. He was going to be my Transylvanian real estate agent. You know what? We should have a TRI campus in Transylvania. That would be perfect. All right. Anyway, I'll leave that for all you Romanians to stew over. All right. Let's see. So this is today, and I really do have to hit the road here pretty soon. As you can see, I got all pretty before I got the video going, so I can just literally hang up and jump in the car and go. So. All right, you mentioned that you plan to do another $500 to $100. Well, I certainly hope I make more money than that. That would suck. Maybe 500 into 100,000. Actually, I'm working with right now. I'm working with about 10 G's or so, so it should be quite a bit bigger numbers than these. When do you plan to start in? I already have, right? That's the whole point of these lists that I'm showing you guys. And I literally do this every single day. As well, too, Eddie is, he actually has like the full on little old lady portfolio rocking. He's already loaded up. He's He's at his little old lady portfolio where I was about the middle of 2016. So just imagine how fucking rich Eddie's going to be when we actually get into the cycle peak in the end of 2025, the beginning of 2026. Like seriously, Eddie, it's going to be insane how much money you're going to be sitting on. So it's already happening, right? And as I said there a moment ago, I'm already building out the list. Everything that you see has a blue dot on it on this list, I've bought. So I told you guys the other day, I bought this POLS. I don't know what the fuck this thing is, but it seems to be working pretty nicely. So I've been talking to you about that. That is exactly what it is I'm trying to get you guys to do. We bought this EOS, exact same thing. You hopefully can see the weekly W. We bought Matic. I've been talking to you guys about this Matic trade forever. So I'm in on this one. FXS. This is Zugi Stick's gift. So it's already happening. We're already, and of course, I've got the names that I can't buy on this Binance platform. And of course, this is assuming Binance still sticks around. It'll be funny if Binance goes and blows itself up, but oh well. But we're also doing it in the DeFi space. So everything that you see as an orange, Fjord is buying in DeFi land. Same logic. So it's basically the same portfolio. So we're buying some of this guy. This is another one that Zugi likes. And then there's Cole's favorite crypto. And look at Cole. Oh, goddamn. Hey, so there you go, Zugi. No wonder you get along with our group so well. So, hey, FYI, Eddie, Zugi's Romanian. So I tell you, we really should put together some sort of Romanian fund and go and buy a really kick-ass piece of property in Romania. I don't know why I never considered that before, but like I said, I was pretty brainwashed as a kid not to like Romania. So anyway, all dogs got to learn new tricks, eh? Anyway, here's one. This is Cole. Cole, FYI, Cole did just the absolute coolest celestial presentation on Friday. That was a daily brief to remember. That was so cool. This is an idea of his, went and bought it. So whoever's asking this question, we're already active. There's no reason why you can't go and buy a little bit of that. I mean, it's perfect. It's exactly what I teach you guys. Bottom end of the range, trend line breakouts, W's on other sides of trend lines. We could probably look at momentum indicators. Look at this beautiful weekly W down in here. I mean, previous bulls, look at all these guys. They're all trapped up here. That's at 4,600. What's the odds of me getting a move up into that 4,600 area sometime over the next year or two to give me my double? Because I'm long from 1,200. That'll be a triple just on a move to that. So it's already happening. All right. All you got to do is look at my list. Look at all this stuff. Look at all the DeFi. I mean, Fjord wanted to get in on this one. Poor old Fjord. You can see I've got bids on Binance working to buy this thing. I doubt I'll get a fill there, but it's already happening. It's already happening. So, you better get off your butt and you better get working. And the good part about it, right? And that's going back to this document. The good part about it is this bull market is, I think that this bull market, okay, let me put it this way. I don't think the bull market has started yet. I think we're in the bottoming window, right? So that bottoming window looks like this. But the good part about this bottoming window is you're not walking into a trap anymore. The reason why most people lose money in this game of investing is they're walking into a trap. Right, the Canasta Club. That's right. It'd be interesting to see whether Canasta is popular in Romania or not. That'd be funny to find out. So I don't think we're in a bull market yet, but we're not in that, oh my God, be careful, public. You're going to get your ass handed to you or your head handed to you or whatever.
So I like the idea of accumulating, and it is happening now as we speak. So you just got to get off your butt. I mean, can you throw $500 into an account? And 5% rule, that means you're putting $25 into a name. Could you not go and buy $25 worth of that cum bucket? I mean, anybody could buy $25 worth of that cum bucket. So it's happening as we speak. And number 2, hi, Brian. Happy Sunday. Wishes, hugs, and love for you and the boy. Thank you very much. Really appreciate that. Be interesting to see what household appliance Liam has ripped today. Good luck with him later on today. Thank you. Would you mind discussing taking a look at or things to consider or fundamentals to apply in markets or like Dubai and India specifically? Thank you. Sean, level 1. I can't really comment on Dubai and the United Arab Emirates. How do I say this? The only reason why the stuff that I do works is because I have a belief that I'm seeing real information. Half of the reason why the Bitcoin story works is because we all can see exactly how many coins are outstanding on Bitcoin. Frankly speaking, I don't know how to fundamentally value something like an Ethereum with now technically limitless number of coins. And if I understand correctly, the way you value a POS like Ethereum now is how much are these collective humans willing to pay gas fees to actually get on the network and get off. And the sad part about it is Joe Sixpack, they'll pay whatever gas fees if they think the circle jerk is going to take prices higher. So you can't use the public as some sort of reference. You have to sort of think about, whenever you hear Vitalik come out and say, you're making my supercomputer too expensive to use, that's your warning that fundamentally something POS is getting overpriced and it's overvalued. Frankly speaking, I don't know if that's enough to use. That's why I love the Bitcoin story so much, and especially with the halvening events, cost of production, proof of work. It's actually fairly easy to figure out what the hell value is. So that brings us to something like Dubai. Can you trust anything anybody says to you in Dubai? I would say no. I can't, there is a gentleman on the site who is encouraging me to go to Saudi and do some lectures and some teaching and stuff over there. But frankly speaking, places like Saudi Arabia actually scare me to death. Isn't that interesting? The Video Ninja, is the Video Ninja thing still working? Because it just kicked out. How bizarre, these computers. I think I better get it. I remember we went and screwed with the computer there a month or so ago, and oh boy, it is not happy.
Yeah.
Let's see, something weird happened there. Video source, no audio. So there's I don't think it was that one. Maybe it's. No, I think if I do this, I bet you. Oh, no, maybe not. Does that sound any better or worse? All right, so it's something that maybe changed in Zoom, but I don't know where the hell they do that. I guess that's over here. Well, there we go. Audio. Not any better? Test, test, test. Oh yeah. Wow, isn't that bizarre? So the microphone, it's actually using it like it lost the snowball. Yeah, that bizarre. Wonder why the hell that happened. Oh well. And I've been talking too much anyway, haven't I? So okay. So just to answer the question with regard to Dubai and actually I can actually hear that. So maybe you need to mute me. I can't give you a comment on investing in Dubai because I just don't know. And I don't know what the data is. You can always do technical analysis. There's nothing wrong with that. Buying against low bottom ends of range, buying and selling against top ends of range, but no way at all to figure out what fundamental value is. And I don't think there's any legal obligation for anybody over there to tell you the truth. Prove me wrong. I mean, if anything, let's, because it is now getting on 1:30, I should get out of here. Let's continue this conversation tomorrow. But with regard to the Middle East, I cannot trust what I'm told there. I've always told you guys a little bit of regulation is actually not such a bad thing. Heavy-handed totalitarian dictatorships. I mean, you all know how I feel about investing in China or Russia. So would investing in Dubai be any different? No. Now, if you happen to know of the creators of the asset, you know where they are long. Of course, places like Dubai, of course, built out themselves a lot on the oil industry. I'm not a bull of oil. So unfortunately, that to me means that Dubai actually has a major headwind in its face going forward. Doesn't have the wind at its back. In the year 2000, it had the wind at its back, kind of like Canada. For the next 20 years, these commodity countries and commodity related countries had the wind at their backs. Now we're into a growth cycle. And frankly speaking, I don't understand the fundamental logic of investing in the Middle East. The only thing I could say, of course, is that they are sitting on huge mountains of cash. But the problem with that is they also like to drive around really fancy, expensive cars and live over the top lavish lifestyles. So they will go through that cash very quickly. And if oil does, if Greta and Klaus and, Carney and all those clowns have their wish, substitute drama teachers, then the Middle East might actually become a very challenging place to actually turn a profit over the next 20 years or so. You won't see that trough until the end of the cycle. Like Canada was technically a short in 1981, 1982, but you really didn't see the end effects of Canada's bear market until 1998, when we had the BRIEX scandal, and you couldn't give away shit here in Canada because of BRIEX. So that's the way that I see this playing out. And in the 1980s, the oil market broke in earnest in 1986, 87. And I think that the same thing's going to happen this go round. That in 2028, 2029, 2030, somewhere in that area, the commodity markets are going to break really hard. And that's the end of that commodity bull. And then the shit really hits the fan for these kind of societies. With regard to India, oh boy, India is a can of worms. Because technically India doesn't really like capitalism. If you listen to their government, they're not really the biggest fans of Western style capitalism. They also still have the caste system to a certain degree. I do see a lot of people do play the Indian stock market, the Nifty. And I do believe that actually, like WB Gann, man, the Indians love Gann over there. They think he walks on water because, of course, a lot of his studies that he did were out of Egypt and then India with things like the square nine, the octagon, all that. So they are absolutely infatuated with Gann over there, and it's cool listening to them. And of course, also too, they're really, really big on the astrology and is it called Vedic? I'm not quite sure. I don't know whether I have that right. But they're super big on that. But I cannot trust a government that can literally come in and steal your wealth in a heartbeat. And of course, you see all the issues that they have with crypto. India is a bit of a challenging society. Somebody was telling me recently they went to India and they got off the airplane, and some guy was literally standing there in the airport holding, I guess he learned it from Liam, I don't know, holding a handful of his feces right in his hand and yelling, "Welcome to India," while he was waving his feces around. So, it's so far away. I mean, if I was reluctant to buy, oh geez, I don't know how to answer that question. I know that in India there are parts of society that are very capitalist, but in a weird sort of way, kind of like like the caste system. There are parts of the society that, yes, you can participate in the capitalist model. And they own factories and they're uber capitalist. But if you're not part of that caste system or that caste class, man, you're just not invited to the party. So sadly, that's my direct answer to you. Dubai in the Middle East, I would be leery anyway. If you are on the inside and you are privy to insider information, you can make ridiculous amounts of money. And of course, totalitarian dictators. If you were friends of Adolf Hitler, Schindler's List and all that, you did pretty damn well in Nazi Germany. But is it morally a good thing to invest in totalitarian dictatorships? I can't answer that for you. Only you can answer that. I can answer it for myself, but I can't answer it for you. And then India is a can of worms, I'll tell you that much. And actually, it's interesting. There are a lot of Indians here in Vancouver in the lower mainland here now. And there are also a lot of Chinese. And historically, India and China have never really gotten along. I heard actually recently there was a major border clash between India and China. It almost broke out into full-on war. So I'm wondering if one of these days there's going to be some interesting racial interactions here in the lower mainland of British Columbia that Whitey here has no idea how ugly this thing can turn. So there's always that floating up there as well. So that's my comment. If you want more talk on this, then just maybe add a note to this. And we'll come back and just look to see whether you guys had any further follow-up on these questions in tomorrow's daily brief. Okay, I think I'm going to leave it at that. It's 1:30. If I leave now, I should get there just right around on time. So PMA, everybody. I hope you enjoyed that. Sorry for the crappy video. Wish me luck with Liam on the road. PMA for the win. All the best. And I think the only thing left for me to say is bye for now.